Hi everyone, and welcome back to another simple daily practice drill I think you can use to become a better trader. And this video is about 10 strategies to trade a channel. So let's go and check it out. In this video, I'm going to use yesterday's price action, which was a bear trend from the open. For many years, I was unable to trade this kind of price structure, and I used to get really upset the next day when I'd look back and see I was unable to take any entries. Even worse than that, I found that the only entries I was able to take were buy setups. My hope with this video is that after watching, it will inspire you to practice a variety of different strategies, which will help you participate in these larger trends. So let's go and take a look. In this video, I'm going to go through 10 different strategies for getting into a channel. My hope is that they'll inspire you to participate when one is forming. So in the post, I talk about what is a tight channel. The channel refers to price action moving diagonally up or down. The speed often aligns by being parallel with the moving average. Here is a channel going up, parallel to the moving average. Here is a channel going down, parallel to the moving average. We often talk about channels being micro channels, like down here, where the high never goes above the high of a prior bar. I find it was always easier for me to enter in this stuff than this stuff. So yesterday, Monday, the 10th of March, 2025, was a bear channel all day. It was particularly tight. And for many years, I found this kind of price action incredibly difficult to trade. The next day, I would look back and wonder, why was I unable to take any entries? Or worse, how come I was only able to take buy setups all the way through? The prior day was a doji. We went down, we went up. We had a little bit of trouble getting below the low, but then did a measured move down. So let's go through 10 possible ways to enter into a channel. So the first entry, fading breakouts of bear trend lines. If you're looking for ways to get into a bear trend, one way is to connect lower highs. You can do it on a micro level using bars right next to each other. You can enter on a touch of that line with a limit order or wait for a sell signal to appear. So you'd be short on 10. If you didn't take that entry, you can then use 7 from the high of 10, high of 12, and down. Maybe you entered on 12, maybe you entered around 20 or 21, you went sideways. Stop would have been above 10, you never got stopped out. One thing to watch when you use this technique is after a few legs down, you can often be entering very aggressively after a lot of bars. If you feel like you've missed the first move, it's typically better to wait for a pullback of 1 to 2 legs. This is strong, wait for a second leg up. This is the end of leg 2. Now you got a sell signal at the moving average. The moving average itself is another trend line that you can short, selling below 26. And every time you draw a line and it cuts that line, you can get short. Now notice at some point, you're going to get trapped. You know with this technique that's going to happen. But if the possibility of getting trapped is too much, you're probably trading too large a size. Another option is to go down a time frame and use the 2-minute chart. Here is a 2-minute chart of the price action. Spike, pullback, and a sell signal. Here's a low 1. Spike, pullback, and a sell signal. Here's a low 1. New low, new pullback, low 1. New low, new pullback, low 1. You call this a low 1 or a low 2. It's all the same. Now notice, once we have 3 bars in an opposite direction, I haven't put a line on 48. But even if you sold 48, we went sideways and you had time to get out break even. Bear spike, pullback, another low 1 or low 2, low 1. So by waiting for the spike to appear on the 2-minute chart and then taking the sell signal, that can help you get in. If I was to then take those entries and replot them on the 5-minute chart, you see how they line up with the bars before. They're all breakout pullback entries. Technique number 3, selling new lows. We've got a gap down and a sell signal 4. 4 gets followed through on 5. We're probably always in short. Can I sell the 4 close? Can I sell the 4 low? I sold under 3 on 6 yesterday, looking for another leg down, and I got out in this tight trading range. Even though I took a great trade here, now I've got to work out a way to get back in. How do I get short? 13 is a new low, I get filled on 14. 17 is a new low, I get filled on 18. My stop's above 10, stop never got hit, or I sell a new low below 34, get filled on 35. And you do that all day. You take a small size when you can, And if it keeps going your direction, you can move your stop down and add on another position. This is a great technique when we're always in short in a channel. If we create a new low, there's a 70% chance we're going to test it. I call this the lowest low one. If you own the market and you sell a good looking bear bar below the moving average, like below 17, there's a really good chance you're not going to lose money. Technique 4. This is what I call the Fenster. I'll flip you. So the Fenster comes from one of my favorite movies, The Usual Suspects, and the character Benicio del Toro plays called Fenster. And Fenster talks and not many people can understand what he's saying. But he has a few scenes where he tells the policeman, hey, I'll flip you, I'll flip you. And so the Fenster is a flip you. We've got a gap down and a doji bar and a good looking bull bar. Now I'm not going to buy it, but I'm going to watch what happens to those bulls. On 4 and 5, now I know those bulls do not want to be in that long anymore. They were hoping we're going to go to the moving average for a low of the day. Now it's definitely always in short. They need to get out of that position. So what I do is I take the opposite of their trade. You either sell below their bar or sell the pullback, expecting for it to go a measured move down. That's 1 times the bar here. And that's a flip. What about 11? 11's a buy signal. It's a possible high 2. It's a possible, it's a possible high 2 bottom. It's at the low of the day before, but we're really bearish. So if you're buying it for a swing. But the moment we go below that bar, you can sell or sell the low of that bar, betting you're going to get 1 times that bar here, which is what happened. What about on 28? 28's another bull reversal bar. Someone bought here. Now we've closed below it on 30. So I'm selling, betting we're going to go 1 times below it. Same on 37. Good looking bull bar. I don't want to buy it in a bear channel. Wait for it to fail. It fails and then sell where they got stuck, hoping for 1 or 2 times. And you can do this all day in a channel. This technique comes from the fact that as a beginner trader, I was always taking weak reversals. So instead of taking them, I wait for them to fail and bet against them. I had a 100% losing rate as a beginner trader. So by aligning myself with the opposite of that, I can have a really high win rate. Number 5, close above high, close below low. This is an indicator that you can download on my blog. The link's on the blog post. It's just showing when a bull bar closes above the high of a prior bull bar, when a bear bar closes below the low of a prior bear bar. You can call this a breakout and follow through. This is showing consecutive bars. We're below the moving average, consecutive bars is probably the direction you need to be going. Selling any of these red bars was a good idea. The first time a counter trend signal appears, okay to get out of your short. I don't want to get long. I do want to wait to see if they get a second leg. They do. And then right away, we've now got a strong close below all of their entries. This is a great opportunity to sell. Now you know that anyone that took this trade has to get out. Selling the pullback, expecting a couple of legs down. Once again, a counter trend move, wait for it to fail. You get your signal on 43. Sell for a move down. 47, 49, 50. So this is another great way to enter if you're not sure. Are we getting closes below the lows of prior signal bars? The logic is if I take a short and I've got a great entry bar, I stay in my short. And this is showing great entry bars. What's another way to enter in a tight channel? Breakout pullback of a bear flag. This is straight from Dr. Al Brooks's books and courses. I'm in a bear channel, which means I'm going to expect bullish pullbacks to fail. Gap down is a bear spike. Here's a pullback. We go below the low of that swing point and we pull back to test. This is a breakout pullback of a flag. You can sell on a limit order or sell the next signal bar, 12. Same again, 18, 23. Here's a possible bull flag. The moment we break below it on 27, sell the pullback. Sell on 28, sell on 29. Expecting every pullback to become a flag. Now, not all days are going to have as many flags as this, but you're going to be aligning yourself with the probability. Technique number 7, limit order test of a breakout gap. I'm looking for breakouts. 5 broke below 4 and created a small gap. I place a limit order at the low of that bar, betting the breakout will have 1 more leg down. 7 breaks below the 6 low and the 5 low. There were 2 opportunities to sell on a limit order, expecting 1 more leg down or at least a bar range. 13 closes below 12, sell at the breakout gap. This is a breakout pullback strategy that a lot of my trading is based on. I love trading breakouts, in particular breakout pullbacks, This is a very versatile style of trading. And because the market is mostly in a channel, you see just how many entries it presents. 27 closes strongly below 26. You see the order below 26 didn't get filled, but the order below 25 did. My order was below 25. This is a technique I practice a lot, and the perfect entry often doesn't allow you to get filled. But I don't get stressed if I miss a really good limit order like this. I just instantly hit sell to close. That means there were so many orders to sell, we could not fill it. And now we've got an open gap. Now we've got a new low. Same on 39. We came back to the breakout point below 37. Breakout to a new low, gap to the 42 low, limit order. So come up with a strategy where it either gets you filled, or if you miss it, you can chase. Now, what about down here below 16? How come I don't have that marked? This is tight. The breakout is 12.13. This is a tight channel. But even if you bought on the 16 low, you got a bad looking entry bar, you take the small loss and you wait for a new breakout. You get filled up here, you make it back and you're back in green. If you take 2 losses in a row, you need to review your technique because you're probably not looking at breakouts or you're in a trading range. Technique number 8, go up a time frame. We went down a time frame to the 2-minute. Now let's go up a time frame to the 15-minute. Here's a 15-minute chart over here. Consecutive bear bars, not closing in a new low. Now we've got 3 consecutive bear bars. It's always in short, we're below the moving average. Highest probability is for a second leg sideways to down. Selling the close, selling below 3, strong first leg, expect a second leg sideways to down. You even had a chance to sell that entry for those 3 bear bars again. Bulls were not able to close up here. They weren't able to shake out any bears. 1 times risk is down here. 2 times risk is down here. Even waiting for a 15-minute spike, a pullback and a low 1 sell below here was basically where the move stopped. You had a chance to do it again here. The 9th possibility of entering in a channel like this, going up a time frame again to the 60-minute chart. Strong bear bar below the moving average, closing below the low of a prior range. Will it get follow through? It gets followed through on the next bar. It's consecutive bear bars at a new low. Traders are going to expect to sell here and not lose money. They want a good entry bar. Selling the close of that second 60-minute bar, bar 24. Selling above the high of that bear bar, fading the high 1 in a bear channel. You even had a chance to sell that same price on the next hour and the next hour. And 2R of that entry was the end of the trend. So you can go up another time frame to enter. And the 10th and final strategy for this post is called second chance entries. Sometimes there's a good signal bar and you say, I wish I would have taken it. The market often comes back to test those entries. 3 was a good low 1, but you don't want to sell the close until you see the follow through. Now you get a chance on 6. You want to sell 5. After you see 7, 8, 9, you get a chance to sell it on 10. 12 triggers, but it's not a new low. New low, get a chance to sell there. 26, you could not sell the second chance, but the breakout pullback low 1 on 29, you could. And you can do this all day. If the market is not filling that second entry, that means the market is strong in that direction. You don't want too many opportunities to sell it. Here is 1 additional chance. So you get a second chance, a second chance, a second chance, a second chance. You don't get 3, 4, 5, 10 chances to sell it. That means that area is probably in a trading range. Hey, well, thanks very much for getting through the video. I hope you found that valuable. In this video, we talked about 10 different ways to trade a channel. I hope you've been inspired to go and practice some of these strategies. Please let me know in the comments below which one you like or which one you're going to research. It'd be great to find out. Otherwise, thanks for watching and I'll see you in the next video.